The E-mini yesterday had a very strong trend, and then a trading range, and then a breakout at the end of the day. But different ways to view this is a parabolic wedge: 1, 2, 3, or 1, 2, 3. So it's possibly a parabolic wedge, higher high, major trend reversal. So bull trend, bear break below the bull trend simply by going sideways, and then a wedge higher high. However, we also have the monthly chart to pay attention to, because yesterday is or was the last day of the month, and right now we have 2 legs down in a trading range in the monthly chart. January is a buy signal bar, a strong one, closing on its high. February probably will trade above January's high, and it could very well do that today. That would trigger a buy. It would be a big high 2 with February last year, a smaller high 2 with October, but it's a 5-bar bear microchannel. First reversal up usually does not get far. Also, if you trigger a buy signal on a higher time frame chart, monthly chart, 60-minute chart, you typically get a pullback pretty soon afterwards. So even if we go above the January high on the monthly chart and trigger the buy, that does not mean we're going to go straight up. Back to the 60-minute chart. So therefore, there might be sellers above yesterday's high. Yesterday's high is the February high, the January high. So even though going above yesterday's high triggers a monthly buy signal, when you trigger those higher time frame buy signals or sell signals, there's usually a pullback pretty soon afterwards. And therefore, we may trigger the signal and reverse. Also, last month is a big inside month on the monthly chart. Whenever you have an inside month, you're always going to be thinking that the next month could be a second inside month. And therefore, February might not trade above the January high at all, and it might reverse down from the January high. Well, guess what? We're right at the January high right now. Is it reasonable just to sell the market and put a stop above yesterday's high? Yeah, right? You'd be risking 5 points or 6 points, betting that February will not get above the January's high and probably trade and possibly trade down 100 points or more. What's the probability of that? Maybe 10%, but it's real. So you're risking 6 points to make 100 points and a 10% chance of success. That math is okay. You lose 90% of the time, 6 points 90% of the time, but 10% of the time you make 100 points, and that more than offsets the losers. So there will be some computers selling right here, putting a stop above yesterday's high, the January high. I said this is a higher high major trend reversal, not a good buy signal bar, 81. You could argue bears might sell below 80, a bear bar, but even 80 did not close on its low. What about selling below bar 1 today? It's a credible pattern, but you're right at the moving average. The channel up is pretty tight. I would wait for a second sell signal. The odds are, at the moment, we're going to go above the monthly high, which is yesterday's high, even though we have a parabolic wedge. Globex chart. We're right in the middle of the Globex range. 90% chance we either go below that or above that at some point today. Yesterday, very strong rally for a couple hours, but most of the day was sideways. Daily chart. This reminds me a lot of the weekly chart. I'll talk about that in a second. When you have a strong bull trend, a climactic rally, and then you get a breakout with consecutive bull bars like this, 60% chance you're going to get at least one more small push up and then a reversal down. 40% chance you'll simply get the reversal down from the breakout without a micro double top. You know, we had that on the 5-minute chart the other day. here, we were likely to get at least a small second leg up, but 40% of the time it just goes straight down. And that's true with the daily chart here, and that's why I bought puts yesterday. 40% chance we go down, 60% chance we'll go higher. And if we go higher, maybe 20 points higher, I'll buy more puts. Not a good buy signal bar, not a good sell signal bar. So it looks like limit order open, market's deciding what to do. Last month closed on its high. Okay, where did my chart go? Last month closed on its high and we're right below the high. And last month is a buy signal bar. Odds are we're going to go above last month's high, which is yesterday's high. Odds are we're going to go above it early today. But what will happen up there? I think with the buy climaxes on the daily chart, the two big bull trend bars, it's unlikely today will be a third big bull trend day. So today's probably not going to be a big bull day. With the buying as strong as it was yesterday, it's unlikely that today will be a big bear day, even with a higher high major trend reversal. And that leaves us with a trading range. And there are two things on the chart that are extremely important today, the blue line and the green line. Those were major magnets. The E-mini broke above them. On the 5-minute chart, it looks like a big breakout, but it's not. And I think we'll test both of these levels at some point today. And the fight today will be over the close of the week. Will the week close above these two important magnets or below? On the daily chart, the December 12th high here was the top of the crash in December, and the market has rallied all the way back up to the top of the sell climax. You get bulls taking profits around there. So it's an important price. We may drift back down to it. And also, the close of 2017, here's the December close in 2017, was an incredibly important price all last year. We just kept oscillating around it all year. And now we're back to it. So it's still an important price, and therefore it might be a magnet at the end of the day. Weekly chart right now is at the high of the week. Last week is a doji bar, a weak buy signal bar, that reduces the chances of this week closing on its high. If you have a weak buy signal bar, you assume there'll be something wrong with the entry bar. And one thing that could be wrong is a tail on the top of the bar, which would mean a sell-off at some point today. So I think we're probably coming down here, and the day will probably, I suspect it's going to end somewhere right around here. So the day and the week. Right now, I think of all the things that it could do, the one thing that is more likely than the others is that we'll finish the day around these two prices, a little bit above, a little bit below. But we have 80 bars left before the day closes, so it could do all kinds of things in the meantime. It could go up, it could go below, but this is probably going to be a magnet at the end of the day. Yesterday we had a trend from the open bull trend. The market tends to get into patterns. It tends to repeat patterns. So there's a slightly increased chance of a trend from the open bull or bear trend today, but it's not high enough probability to take any action too early to conclude that. I want to see 2 or 3 consecutive bull bars or 2 or 3 consecutive bear bars before I start thinking about a trend. Bulls trying to trigger a high one buy to get above yesterday's high, which is last month's high. That's the buy signal. The bulls want to move above yesterday's high. And the bears want a lower high and a second leg down from this wedge. As I said, that's the buy signal. I tried to buy on a stop above 2, and I was too late, so I missed the buy. I would have scalped. Yesterday ended with a parabolic wedge. Bulls trying to break above the parabolic wedge. In general, whenever the market breaks above a wedge or below a wedge, 50% chance you get a swing and 50% chance you get a reversal. I think we're going to fail around yesterday's high. We might go a little bit above it. We're triggering a buy signal on the monthly chart, but I think this is going to be the magnet all day. So even if we rally for an hour or two, I think we're going to come back down here. These prices have been so important, and we're reasonably close to them. Unless we break far away from them, the magnetic pull will tend to draw the market back down. All right, remember I said the bears want February to be an inside month. They're selling right below the January high. So, I said you could sell in the open and risk 6 points. Well, there were some computers that sold 2 or 3 ticks below the January high. And now they're risking, 5 or 6 ticks to make 100 points in February. So I think the math is interesting. They know the odds are very high that they're going to lose whenever you risk very little to make a big reward. Odds are you're going to lose. However, the math makes sense. So it's reasonable for some computers to be taking that trade. If I were running a trading room, I probably would have at least one computer taking that trade. So I'd have one computer taking crazy, bad probability trades with very good risk reward. All right, can 3 close on or near its low? We have a 9-tick trap for the bulls. It went up 9 ticks. They needed 10 ticks to make 2 points. And can they reverse down from just below yesterday's high? Possible high of the day, but unless it's a pretty good bear bar. Okay, it's not a good bear bar. Unless it's a pretty good bear bar, it's not worth shorting below 3. Right now, the odds still are that we're going above the January high today and probably early on. To see what's there. It's a buy signal on the monthly chart, and we're right near last month's high. So I think the market wants to see if there are buyers or sellers above the January high. Micro double top, possible inside bar on the monthly chart, but consecutive bull bars, doji bar, probably bull scalpers, 3 low. What happens if 4 closes on its low? That would be a higher probability sell signal. Yesterday we ended with a wedge higher high major trend reversal, but we do not have a good sell signal yet. Bears might get an okay sell setup with 4, but 8 bar tight trading range and important magnet just above, so not a very good sell. A lot of traders will wait for a couple bear bars before concluding that we might be going down. Possible high of the day, but right at the moving average, and only a single bear bar so far. So not a strong sell setup. Swing bears, I did not take the short, but swing bears stop above 3. Might get a high 2 if 5 reverses up. With 4 as big as it is, 5, the bulls need a very strong bull bar on 5. Otherwise, they'll wait. They're trying to prevent consecutive bear bars, which would increase the chances that we're going down to the targets below, and the bulls trying to get a high 2 buy with bar 2, but they should not have allowed 4 to be that big. Because they did, a lot of the bulls are not going to buy above 5. They'll wait. High 2, double bottom 79, but small bull body, so not a strong buy. While it's a possible low of the day, it does not look like a strong enough foundation to reverse bar 4. So probably more trading range open. Are we always in short from bar 4? Yeah, I would say we probably are, but I typically don't like to conclude always in one way or the other until we've had a couple consecutive trend bars, with one of them being reasonably big. So we were always in long by the close of 1, but nobody's going to be buying up there. They'll buy above 2, but they're not going to buy the close of 3. And I think we're always in short with the close of 4, a surprise bar down. But why were the bears unable to get a second consecutive bear bar? Increases the chances of more sideways. So far, limit order trading. No sustained movement up or down. Traders betting on reversals instead of on the trend. We're slightly more bearish than bullish. We have a higher high major trend reversal yesterday, 81. We have a second entry sell below 3. Another sell below 4, but selling below 4 is forcing traders to risk too much for a pattern that is not all that strong. It would have been better for the bears to get a good sell signal bar 3 with smaller risk. You see how quickly that reversed up? Outside up, really hard to buy above 6. This was a really big problem 30 years ago. This would happen all the time. And you'd get a 7 o'clock report and the market would make an abrupt reversal or a huge breakout. And you could not place orders electronically. You had to call. So you have to call the broker. You have to wait for them to pick up. The guy who picks up has to write out a ticket. He has to hand it to another guy, a runner. The runner has to take it to the pit and hand it to a trader. The trader has to do hand signals, find someone to take the other side. He's got to tell the runner the order's been filled. The runner has to take it back to the guy on the phone. The guy on the phone has to tell you. So even under the best of circumstances, it's going to take a couple minutes. And it made it impossible to trade reports if you're not on the floor. The guys on the floor had a huge advantage, but that's not the case anymore. Now everything is electronic, and basically they're in a position to steal money. And that's true for guys working the stations on the New York Stock Exchange and the NASDAQ. They could manipulate prices and make a living basically because of unfair advantages that they had built in just by the nature of how orders were transacted. But electronics now make it much more equitable. It takes away that big advantage. So basically, you can be a stupid guy on the floor, either in the futures pits or in the New York Stock Exchange, and be essentially guaranteed making a lot of money just because you had an unfair advantage over people who are not on the floor. Better to wait. It's still on the sell, below 4, below 3, but I think most traders are better off waiting. I am flat right now. The bulls double bottom 79, high 2, 5, micro double bottom 6, 6 and 5, and that monthly high, yesterday's high, is a magnet above. I think we're going to go up there, but I also think we're not going to go far above last month's high, and I think we'll come down here at some point today. So we're probably going up here, we're probably going down here, and we'll probably finish the day in the trading range. But I'll quickly change my mind if we start to trend strongly up or down. Consecutive bull days on the daily chart in a buy climax. Today probably is going to be a pause day. Like the weekly chart here, consecutive big bull days and a buy climax. The next week is a pause day, and then one more week up. Back here last year, I said that we're going to get one more push up and then a 5 to 10% correction, which we did. And it's the same thing here on the daily chart. We'll probably get a pause day today and go a little bit higher, and then start to pull back. Probably back to reason long. 7 reversed 4. Okay, we just triggered the buy signal on the monthly chart by going above yesterday's high, which is last month's high. I think, the mic was off, but I said that I thought we were going above yesterday's high, and if we do not go too far up, we'll probably come back down here at some point later in the day. Important bar, if the bears can get a decent bear body, maybe a 3 or 4 tick bear body, and a close on the low, it would be a credible sell setup. Failed breakout above yesterday's high. Bulls trying to get consecutive bull bars closing on their high to buy the closed market. The more this closes on its high, the more willing traders will be to buy closes by the market. Surprisingly strong 7, 8, and therefore most traders are not going to sell below 9 unless it's an exceptionally strong bear bar. Okay, we achieved the Globex goal. We broke out of the Globex range. Suppose it's a 2-tick bear body. What do? Well, bulls will get out of longs with any bear body. On the open, no matter how strong a trend up or down is, 50% chance it'll reverse without a micro double top. So you can get, this is something of a micro double top. Up, down. Parabolic wedge. We do not have a parabolic wedge today. But sometimes you can get this, it just goes straight up and then reverses. This is a better example. Just straight up and it just reversed. 50% of the time it'll do it, but you need a bear bar. Right now it's still by the close. Pausing 5 ticks above 8 tells you that a lot of the bulls are trying to scalp for 1 point. That's a sign of a lack of conviction. If 9 is a pretty good sized bear bar, I think bears will sell. If it's any kind of a bear bar, even a small bear bar, I think a lot of the bulls will get out below. Typically, most of the time, you need a micro double top. You can argue we have a double top, 3 and 9, but most traders want to see at least a micro double top after a surprisingly strong breakout 7, 8. Probably buyers below. However, because reversals on the open are common, I think traders also need to get out a certain number of ticks below 9, just in case 9 ends up as a huge bear bar. It's nice to say, well, wait for a bear bar and get up below a bear bar. But if 9 looks like 39, you don't want to be getting out down here. So I would get out maybe 6 or 7 ticks below any bar, including a bull bar. We're breaking above last month's high, which is yesterday's high, and you have to assume there'll be some limit order bears are sold the high of the day and yesterday's high and scaled in higher, and they're trying to drive it back down below the breakout point. I would not do that. This is 7-8, a big enough surprise. Better to be looking to buy until we start to get some bear bars. To buy above 10, bulls want to see the bar to close near its high, and the bears are trying to get a micro double top. Failed breakout yesterday's high. But the bears need a bear bar. Because of the micro double top and outside bar 10, I would get out below 10 and wait. Bulls hoping for a repeat of yesterday, where it kept going up despite weak follow through after big bull bars. Not likely to happen. So big bull bars, bad follow through, bad follow through, bad follow through, yet kept going up. More likely this is going to be the final bull flag. Different ways to draw a wedge. We had a wedge here, now we got a wedge here. So as you can tell, I think we're not going all that far up. Micro double top and wedge, but 5 bars without a bear body and 4 consecutive bull bars. Better to wait to sell below a bear bar. Tail 9, tail 10, so weaker by the closed bars. We're getting near the end of the first hour, and bulls trying to get as good a bull bar as they can get. But consecutive bull bars late in a buy climax, usually you do not get a third consecutive bull bar. Here's an example: 2 bull bars and then pause. So next hour is probably not going to be a big bull trend bar on the 60-minute chart. Daily chart, we had 2 big bull days. That reduces the probability that today will be a third big bull day, increases the chances that you'll get profit taking. Now, let's say we get a bear bar 11, failed breakout yesterday's high, double top 3, wedge rally, possible high of the day. So it's an okay short, but with 6 bull bars, 5 or 6 bull bars, a lot of the bears will wait for 2 or 3 bear bars before shorting. Bulls trying to get another surprise bar 11. That would increase the chances that we'll go at least a little higher. I did not put in a measured move here. That's always a potential target whenever you get a breakout on the open. It looks like some bears sold the 9 high, but it looks like they traders bought the 10 high and went 7 ticks above 10. Do I still think we're going to get a reversal today? It's becoming less likely, but I still think we'll get a reversal today. There's no sign of it now. It's by the close right now. Plus we have a target above. Possible parabolic wedge. You could argue up on 6, down on 6, and then up on 8, pause, and then 10, pause. But I suspect the count got reset with 7-8, so this is 1, pause, 2, pause, and probably one more leg up. Buy climax, pause, buy climax. So probably a parabolic wedge rally. You can get very strong rallies that reverse abruptly. Here, only 2 legs up, 1 pullback, 2. But the bears need bear bars, preferably a couple bear bars. Small wedge, bigger wedge with a small wedge here. Parabolic wedge rally. I would get out of longs below any bear bar, even though right now I think we'll probably get a little bit more up because of that potential measured move. And for the bears, where are the bear bars? You know, will you sell the first bear bar on 12? I would wait for a second sell signal. Another minute left for the first hour, and so far a big bull bar and consecutive bull bars. Unusual to get a third consecutive bull bar, so next hour is probably not going to be a big rally. Unusual to get 3 consecutive bull bars late in a buy climax. Bulls, I'd get up below any bear bar. And for the bears, while it's a possible high of the day, I would wait for a micro double top or 2 or 3 consecutive bear bars before thinking about shorting. Bulls are still long, but I would get out below 12. Some bulls will buy the 12 close, trying to prevent 13 from falling below 12. They know if it falls below 12, it will increase the chances of a reversal. Not necessarily below 12, but within the next few bars. So the bulls want to keep the micro channel going. You know, we had that yesterday. The bulls prevented the market from falling below any bear bar. Here, same thing. Bear bar. Bulls bought the close, prevented the market from falling below 56. That increased the chances that we would go higher, maybe get a couple legs up. So I'd be out of longs. Really aggressive bears can short, but 7-bar bull micro channel, probably more sideways than much down. You can get really abrupt reversals. So it's a possible high of the day, but I would wait for additional bear bars. Typically, if you have a very strong rally and reverse, it'll go sideways for 5 or 10 bars before the bears can get a bear trend. Sometimes you just get an abrupt reversal. It just goes down for a lot of bars. That's unusual. Normally, you need at least a micro roll top. Stop order bears made money selling below 12. That is good for the bears. It increases the chances that we're not going to go up much further. It increases the chances that we will get a reversal at some point today. Was it reasonable for bulls to buy the 12 low, 7-bar bull micro channel? It's reasonable, but I would not do it. And because it's reasonable, we're probably going to get back to that 12 low. So the bulls, a high one in a bull trend, a big bear bar 12, that will make a lot of bulls hesitant to buy above 13. So we may start to go sideways here. Whenever there's a big move up and a big move down, it generates confusion. And that increases the chances of a trading range. We still have a measured move target up here. And this is still a 7-bar bull microchannel. So the odds still favor a little bit higher, but I think we're going to get a reversal. I do not think today's going to be a big bull trend day. Are you going to buy above 13, high one? Nope. I said traders will probably not buy above 13 consecutive bear bars. Will they buy above 14? It's still a high one bull flag. If it's a bar closing on its high, some traders will do it. But 12, 13, I would wait for consecutive or a second buy signal. I still think we're going higher, but we may go sideways more after such a big reversal down. Here, the bulls had a second buy signal, first, second, high one, high two. If you buy above 14, can you put your stop below 13? I don't know. If you're buying above 14, I'd probably keep my stop below 6, and there probably will be buyers below 13. However, if we collapsed down, I would get out before my stop could hit. So I think it's not a great buy above 14. Remember, I said the second hour today would probably not be a big bull hour after the 2 consecutive big bull bars on the 60-minute chart. Limit order bears selling 14 high and 1 point higher made their money. Stop order bulls, 5-tick trap. So more sellers than buyers above 14. The bears trying to get a second sell signal, a small double top, 12, 15, but they really need a decent bear bar on 15. They're trying to get a micro double top. Traders will sell below a decent bear bar, a good sized bear body closing on its low, looking for at least a little swing down. Here we have a micro double top with a doji. Here we have a bigger bear bar. If you take the sell, your stop is above that high or above this high, because after a buy climax, the market might go sideways for a lot more bars. Here's another sell below that bar, and then one below that bar. That's the sell below 15, but if it has a 3-tick tail below, I think most bears will wait. The bulls know that, and they'll try to prevent 15 from closing on its low. Big enough tail, a lot of the bears will not sell below 15. There might be more buyers than sellers below 15 and more sideways. Second sell signal for 3 bars with tails below. I would not sell below 15. Probably buyers not far below. I say that even though I think we're going to get a reversal at some point today. I suspect we're going to go sideways here more. Good bar for the bears, right? Can you sell below 16? I think you can, but I also think that we're probably going to be sideways here. Bulls trying to get a high 2 buy above 17. We're starting to accumulate a lot of bear bodies. Bears, do they get out of shorts above 17 if it's a bull bar? It depends what their goal is. If they're a scalper, let's say they sold below 12, they've probably already scalped out. If they sold below 15, not good enough for a scalp. So that means we probably only have swing trading bears left. And if you're swing trading, unless it's a very strong buy signal, you rely on your stop above 12 or above 15. So unless 17 is a pretty good sized bull bar closing on its high, the bears can hold short. What happens if it is a big bull bar closing on its high? What do you do? Will the bulls buy? I would not. We get 4 bear bars and only a doji on 14. So I think it's more bearish than bullish right now. Testing the breakout point, the high of 3, yesterday's high. We theoretically had some limit order bears that sold and sold more higher. Is it always in short yet? If this bar closes near its low, it probably is. Bulls are hoping this is simply a test of the breakout point and that we reverse up, but we're getting too many decent bear bars. Can we get all the way back down here? Yeah, I said I thought we would come down here at some point today. I doubt that we're going to do it now. I think this rally is so strong, we'll probably stop going down soon. Y climaxes, when they reverse, usually have hesitation on the way down. Down for several bars, bounce halfway up, collapse, bounce. So the bulls at 50% pull back a little bit more, high 2, 14, but too many bear bars, and most bulls will not buy above 18. They'll wait for it to go sideways for a few bars and take a second buy signal. And for the bears, always in short, but middle of what could end up as a trading range. Bears, I would get out above any bull bar. Not a strong buy signal bar, 6. So some bears sold the 6 high, sold more below 12, trying to get it all the way down to the 6 high. And they can get out break even on their first sell and then with a profit on their higher sell. You've probably seen the high of the day. The bulls are hoping this is just a deep pullback from a strong rally. I think we're going to enter a trading range. You know, we have big down, big up, big down. And we had a trading range yesterday. Okay, down to the 6 high. So will bears buy back their shorts, or will they hold short, looking for a reversal all the way back down to the targets below? Ticks hit minus 800, probably not the final low in price, but climactic. I don't have a channel line drawn, but it's a bear break below this bear channel, so we're probably going to bounce here. Is it still sell the close? We've probably seen the high of the day. However, I still think a trading range is more likely than a big bear trend. And therefore, if you have a bear leg and it's a trading range, you're going to get a bull leg. Bulls are trying to stop the selling. They probably have to make it go sideways for a few bars before they can get a reversal. For the bulls, it's a higher low 6, a high 2, 12, with 3 big bear bars. Most bulls are not going to buy above 19. They'll wait for 3 consecutive bull bars or for a micro double bottom. For the bears, we have an extreme tick reading, usually not the final low in price. I'll draw the line in. This is what I was talking about. We have a bear channel and a bear breakout and a reversal. Usually you get a couple legs up on this time frame, so we're probably going to get a couple legs up on the 1 minute chart. However, we have an extreme tick reading here. This will probably not be the final low of the day. Sometimes the reversal up will last 10 or 20 bars. 20 bars is 20 minutes. That would be 4 bars on the 5 minute chart. Can you buy for a scalp above 19? Betting bears will take profits. I think bears should get out above any bull bar, including
Muted.
However, I think we're always in short, and I think we've seen the high of the day. Not necessarily, though. Sometimes you get these really deep pullbacks. Sometimes you have a really strong rally, a really strong sell-off. And I do think this will be similar to today, trading range. But sometimes you can get very, very abrupt, repeated reversals. Very strongly down, very strongly up, and then down. Like this, up and big sell-off, higher low, but big sell-off, and then big rally, tested the high, and then big down again. I mentioned early on that the bears might get a parabolic wedge top, and they really did not get one. They have a wedge here, and they have something of a micro wedge here, up on 9, down on 9, up on 10, down on 10. And then the bulls tried to get that breakout on 11 for a third push up, and it was a failed breakout, and we got the reversal. Some bears sold below 12, others waited for a second signal below 15 or 16. And right now, we've probably seen the high of the day. We may also have seen the low of the day. I said today probably would end up with a lot of trading range trading, and the bears would probably have a hard time getting a big bear trend day after such strong buying yesterday and the day before. So they could stop the rally and turn it into a trading range, but unlikely to get a big bear trend. So, and then also potential final flag, and we broke above major targets on the daily, weekly, and monthly charts, and therefore there's not much need to go much further up, especially with the daily chart being climactic. So probably not going to be a big bull trend, probably not going to be a big bear trend, and that leaves us with either a weak bull or bear trend or a trading range. Confusion, pretty good reversal, 19, 20. So probably buyers below 20, buyers below 21, buyers below 19. So if we get one more leg down, probably buyers below. And sellers, some bears would sell 19 high. I would not. I'd get out of shorts and wait for a couple legs sideways or up and then sell again. Can this get all the way back up here? It's possible, but I think that the sellers will come in before then after such strong selling, 16, 17, 18. We're right in the middle of the trading range. We may go sideways here. Might be a lot of limit order trading. Let's say we get a weak bear bar, a bear doji, 21. Probably sellers not far above, buyers not far below. 60-minute chart, I said after two big bull bars, the second hour today, the third bull bar, or the third bar here, would probably not be a big bull bar. You look at it, it's confusing. We rallied, we sold off, we rallied, we sold off. Trading range behavior. Probably will get a lower high, but the leg up to the lower high may have 2 or 3 little legs up in it. Testing yesterday's high again. We broke strongly above it, collapsed back below it. Probably a couple legs sideways to up after the sell climax down to 18. Always in bears, they get out. I would get out above 19. And theoretically, they have to sell again below a bear bar with 19 and then 20 consecutive bull bars, pretty good bull bar, 20. I would wait for a second sell signal and not sell below 21. If 21 ends up closing on its low down at the 20 low, I think bears might sell it. But unless it's really a pretty big bear body closing on or near its low, more likely buyers below and sellers above. Bar 21, it's a multiple of 3, and therefore it corresponds to a close on the 15-minute chart. Here's the 15-minute chart. Does that look bearish? No, it looks like one bear bar and then a pullback to the moving average. They bought the moving average here. They bought it here, testing it again here. So not particularly bearish on the next higher time frame, 15-minute chart. Can you buy above that bar? Pull back to the moving average. Consecutive bear bars, decent sized bear bar. I think big enough down, a lot of the bulls will want a micro double bottom or a second buy signal. So not a strong buy on the 15-minute chart. Confusion. Trading range likely. The one thing traders agree on is it's probably not going to go very far up and not very far down. So traders will sell as it goes up and buy as it goes down. And because they do not think it's going to go far, they'll take quick profits. And the result of buying low, selling high, and scalping is a trading range. The bears want a lower high major trend reversal after the wedge top. Very often when you get a wedge top and reversal down, you're expecting two legs down. The pullback from the first leg down forms a lower high major trend reversal and a head and shoulders top. So left shoulder, head, right shoulder. Wedge top, 1, 2, 3. Expect two legs down from any kind of a biclimax, including a wedge. So you got a first leg, and then the rally from the first leg forms a lower high major trend reversal, and it typically forms a head and shoulders top with the second leg up of the wedge. So 1 pullback, 2 pullback, 3, and then 1 pullback, you expect 2. So head and shoulders top, lower high major trend reversal. Bigger version, 1, 2, 3. First leg down, you expect a second leg down. Here we got a double top, lower high, major trend reversal, head and shoulders top. Decent 15-minute buy signal bar. So some bulls are taking the buy, but I think they'll probably scalp after the two bear bars, especially with that second bear bar being so big. Are we back to always in long? If this bar closes near its high, it's probably always in long, but I think a trading range is most likely after several reversals today. In a trading range, it usually looks most bullish before it reverses down and most bearish before it reverses up. For the bears, a lower high. They want a lower high major trend reversal, but 3 bull bars, most bears will want a second sell signal, and therefore they're probably buyers not far below 22. So I'm not planning to sell below 22 or close on its low. That would discourage bulls from buying below, and it would increase the chances that it's the start of a swing down. But with the 3 bull bars, I think a lot of the bears will want a second sell. In other words, they'll wait. Why are we hesitating? Lower high major trend reversal, good sell signal bar. Traders see it as a trading range day, and they see the 3 bull bars, and they know that it's probably going to be more buyers than sellers below 22. Swing bears can sell, stop up here, but they're risking a lot. Scalpers, what's your goal? 1 point profit? You're going to risk 4 points to make 1 point. Not a good scalp. You can see not many traders took the sell. Let's say we get a close above 22. Can you buy above 23? It probably would be an okay buy, but it will probably end up as a scalp. Sometimes you get a sell-off and then an outside up bar, and it begins a big bull trend day. But I think the odds are against a trend day today. Unfortunately, today might be one of these days where we just keep getting repeated big reversals. Very bullish, very bearish, reverses up. Very bullish, reverses down. Very bearish, reverses up. I don't think it'll be this violent, but I think this is the kind of thing that we'll get, some kind of a trading range. This is consecutive outside bars. 22 is outside down. Even though it did not go below 21, it got down to the 21 low, so it's a type of outside down. And then if 23 is outside up. So that is a buy signal above 23, consecutive outside bars. Sell-off reversal, consecutive outside bars. Traders buy, looking for a little bit up. Trying to reverse up, consecutive outside bars. They buy above the high of the second bar there, or above that bull bar closing at its high. Bull trend, consecutive outside bars, bull flag. This is the daily chart. We have consecutive outside bars on the daily chart. So traders buy above the high, which is up here. I think this does not look right. I have to take a look at this. No, I don't have the next day in. So the buy is up here. Tail, so weaker buy, increases the chances that we go above and then pull back. But if we do go above, we'll probably go at least a little bit higher, whether or not we pull back. Could it also be an consecutive outside bar bear flag selling below 23? It could be, but I think it's more likely that we're going to go up. If you're looking for consecutive outside bars and a sell, you want the second bar to be a bear bar, not a bull bar. The bears want a low 22, but right now, unless 24 is a pretty good bear bar, we're probably going up at least a little bit, maybe to the sell climax high, 17 high, 16 high. We're getting near the end of the second hour, and even though we sold off strongly, we're trying to get back near the open. Remember I said that this hour today would probably not be a third consecutive big bull bar. It's the second hour of the day, but the third bar after two big bull bars. Bears want a low 2 below 24. But when you get that tail 23 like that, and you trigger the buy, a lot of times, it doesn't go straight up. A lot of times it'll go sideways, but the odds are it'll go a little bit higher. Let me just see. Just do it this way. Sometimes it triggers and you try to reverse down. I doubt we're going to get that, but I do think we'll go up at least a couple more bars. Here consecutive outside bars, but tail tried to reverse down, but buyers below eventually went at least a little bit higher. I think this is similar to today. Consecutive outside bars, but bad entry, yet still went a little bit higher after pulling back. That's the low 2 for the bears, but a doji bar plus consecutive outside bars. So a lot of traders will not take that sell. Suppose 25 closes on its low. What do the traders do? That would be a higher probability sell for the bears. Bulls, it's tricky. In general, if you're buying and the market might be in a bear trend, it's better to get out below bear bars closing in their lows. Not a good looking buy signal bar 24, so you might have some bears selling above. You can see limit order bulls bought 24 low. In a trade like this, I did buy the 23 high. I bought more 24 low, and I get out break even, so I'm back to flat. I was disappointed by 24.25. I still think we're going to go higher. We have outside up trading range day and pretty good sell climax 16, 17, 18. Trading range day, nothing is as certain as traders want. On a trading range day, I tend to take a lot more break-even trades. I've already had probably 2 or 3 today, probably 3, where I took something disappointed by how it was unfolding, and I just get out break even. Bears trying to get a second sell signal, 26, but they need a bear bar closing on its low. And even then, I think it's hard for the bears because they want the bear bar to close below the moving average, which means they want 26 to be outside down. So it's still more likely that we're going to go up. Second entry sell, bear bar, but tail. So I still think the odds are slightly better that we're going to go up to that 17 high, 23 high. Some of the bulls have bought there disappointed 24, 25, 26, and they're trying to get out break even or maybe with a 1 tick loss. So you have some bulls selling right here. We don't know if there'll be more bulls selling out or more other bulls buying, betting that the bull trend is resuming. We'll find out in the next couple of minutes. It's still more likely that we're going here or here, top of the sell climax. The last hour, bar 24, 60-minute chart. It's an inside bar and a bull trend, so it's a high 1 bull flag. But here we have a bull bar, high 1, higher probability of going up. Here we have a bear bar with a pretty good sized bear body, and the entire bar is pretty big. That makes it a low probability buy, and there probably are sellers above the high of the bar. So probably sellers above bar 15 and the high of the day. Unlikely to be a big bull trend day. Bears might get a wedge lower high, low 1, low 2, low 3. Right now, bulls are trying to get a breakout above the lower high 24. They'd like to get a measured move up. I think we're going to go higher, but I'm not. Right now, I don't think we're going to get the measured move up. This is better for the bears. Bulls trying to get a breakout above 24 and measure move up, but bears are getting a credible wedge. So low 3, low 1, low 2, low 3. They need a decent bear bar, 28. If they get it, it's a short, looking for a couple legs down. Remember, today's probably a trading range day. Trading range days have bull legs and bear legs. And bears trying to get a bear leg here. A lot of the bulls who bought above 23 disappointed 24, 25, 26. They're getting out around break even. Can you trade this for a swing, lower high major trend reversal? It's a fairly tight channel, so it probably will not be a swing. It probably will be a minor reversal and more sideways and more confusion. But I think bulls have to get out below 28. And bears, is it high enough probability for a scalp? The bar is getting bigger and bigger and bigger, and that makes the bears need more probability. If you're increasing the risk and you're looking for a scalp, you have to increase the probability as well. And that is not, I think it's not good enough for a scalp. We have a tight trading range. We're right at the moving average. The risk now is pretty big. So you need, if you're scalping from 1 point, so you need high probability. The probability is not high enough. You can see they bought the 27 low. Are the bulls still long above 23? Well, we have not gone below a bear bar yet. 24, not a bear bar. 25, 26 bear bars, but did not go below them. 28, we don't yet know if it's a bear bar, but I would get out below any bear bar. Not a good stop entry sell below 27. And even though we're always in long, and still on the buy above 1, the buy above 21, the buy above 23, and another buy now above 27, above 28. It's, I think, very difficult to hold long. It looks like a bull leg and a trading range. Weak follow through, lots of reversals, and buying at the high is really not the best way to do this. The bulls who bought above 23 finally can get out with a 1 point scalp. Bears still trying to get a wedge, but the channel is so tight. Most bears are not going to want to sell with a stop on the first reversal down. They'll wait for a micro double top. Bulls, it's back to buy the close, but we're at the target zone, the top of the 16 sell climax. So we may stall here. I still think today's going to be one of those days with lots of reversals, legs up and down. This is an extreme example. Right now it's always in long since 20 and buy the close, and this is simply a deep pullback from a strong rally. You got buy the close, bulls 11, and right now it looks like we're going to get back up there. A lot of times when you get a buy the close rally, you get a really deep pullback like this, and it still gets all the way back up to the original buy the close bar, allowing the bulls to get out, break even. And right now it looks like we're going up there. We may stall 15 high, but most bears are not going to sell below 30, no matter what it looks like, because the channel is so tight. You got some profit takers at the top of the sell climax, 16. But this looks more and more like a buy the close deep pullback day. So buy the close, tremendous sell-off, but no chance for the bears to get out. And a lot of times, and no chance for the buy the close bulls to get out. A lot of times when that happens, you get all the way back up there. Today the bulls did have a chance. We had that micro double top 15, so there's less need to get back up there. But it looks like we're trying to get back up there. I did buy again. In general, if there are bull bars closing at their highs, and in a bull swing, I tend to try to buy above the bull bars or by the close, or buy a tick or two pullback. For the bears, a low 3, low 1, low 2, low 3, but magnet above and pretty tight bull channel. I think the bears need at least a micro double top. Bulls, they'll get up below a bear bar, especially a bear bar closing near its low. But the bears need more than that. They'll need a micro double top. Here we have a small double top. 5 tick trap for the bulls who bought above 29. So some of them are getting out here. Low 3, lower high, major trend reversal, but 4 bull bars, probably buyers below 30. I would not sell below 30, nor would I sell below 31. I want to be clear about these buy the close rallies. Usually, if it's a buy the close rally, traders can avoid a loss, and they can usually make a profit if they scale in. And if you have a buy the close rally that just goes straight down, the odds are pretty good that you're going to get back up to that high close. On the other hand, if you have a buy the close rally that goes down and has a small double top, it's less likely to come back up here because that small double top represents the buy the close bulls 11 giving up, getting out. So they had a chance to get out with a small loss, and that lowers the probability of the market having to come back up there. The bears who got out, the bulls who got out have less incentive to buy down here. If it just goes straight down like this, reasonable buy the close, buy that high, buy that close, reasonable to buy the close, and no micro double top. They never could get out. Bulls will buy more above a bull bar, expecting to be able to get out, at least break even. This is the midpoint between their two buys. They could get out here, or they could hold for a test of their original buy and get out break even on their first buy and with a profit on their lower buy. The bulls had no chance to get out. More incentive to buy to try to get it back there. If you have some kind of a double top, buy the close bulls had a chance to get out. Less incentive to get back there, although we did get back up to the high. No chance to get out. So the bulls have a pretty good incentive to buy above bull bars, expecting it to get back up to that high close. Like today, micro double top, micro triple top, very strong rally, but the bulls had a chance to get out without a loss, so less incentive to buy, and we never get back up there again. Here, no chance to get out without a loss. Never got all the way back there, but we got halfway. So the bulls who bought that close and bought more above a bull bar here or here got out at the midpoint of their two entries and avoided a loss. The bulls who held, hoping to get up here, end of the day, they get out below a bear bar. So with a small loss, a little bit below the average price. High one, to me, it looks like a pretty tight bull channel. I think it's okay to get out of longs. I don't think we're going a lot higher, but I would not sell. I'd wait for a micro double top or for 3 consecutive bear bars. I still think we're probably going to try to go higher. Does this look like a bull trend? Does it look like this? No, it's not. It's a bull leg in a trading range, and the market's simply looking for the top of the range. The bears are hoping 31 is the top. But the channel is fairly tight, and when you have a tight channel, the first reversal down usually is minor, which means sideways, and then the bears will try to get some kind of a small double top like they were able to get up here. 2 consecutive bear bars, good for the bears, but still a pretty tight bull channel, so a minor reversal and sideways more likely than the start of a swing down. Bull trends typically do not look like this. So this is not a bull trend. It's probably a bull leg in a trading range. And traders are simply trying to decide where the top of the range is. Right now, it's up here, 12 high. It might be a little bit higher, might be a little bit lower. Stop order bears want a micro double top. Bulls, 2 consecutive decent bear bars. Most bulls are not going to buy above 33. They'll wait for a micro double bottom. So bears do not want to sell with stops. Bulls do not want to buy with stops. We may go sideways here for a few bars, and the bulls will try to get a high 2, a second buy signal. Bears will try to get a double top, a second sell signal. Suppose we got 3 bear bars. It could flip it back to always in short. but tight channel, unlikely to go very far down, maybe around the 28 low. Probably better for limit order traders buying below things, scaling in lower, and limit order bears selling above things, scaling in higher. When you got a tight channel like this, small pullback, bull trend, small pullback, small pullback, small pullback, it's usually a series of trend bars on a higher time frame chart, like a 15-minute chart. Here we're in a channel, but when it's tight, it's usually a breakout on a higher time frame chart. And 15-minute chart, it is a breakout. It's 4 consecutive bull bars. Even though the bears have a double top, 4 consecutive bull bars, most bears are not going to sell the first time down. Bears trying to create a bear body. We know bears will sell above things. They sold above 22, they sold above 24, scaled in higher, made money. They sold above 16, the sell climax high. So they're selling above prior highs. We have a bull flag here, 33, and the bears, if they have 3 bear bars, will probably start selling above the bull flag, above the 33 high, in addition to selling up there if we get up there. 3 consecutive bear bars, while not always in short, it increases the chances that the first reversal up will not get very far, and that means it increases the chances that there are sellers above 33. The bulls will probably want a micro double bottom. With 3 bear bars, you'll get bears starting to sell closes, selling more higher. But I think we're probably going to bounce pretty soon because the bull channel is so tight. Typically, a tight bull channel does not immediately become a bear trend without first transitioning into a trading range. Sell climax high, a magnet for the bulls who bought the reversal. Buy climax low, a magnet for the bears who sold the reversal down. Probably always in short, but still probably a trading range with buyers somewhere around these lows, maybe all the way down here. So probably not going a lot lower without bouncing. Buyers below things, probably buyers below 28, 25, 23. But 5 consecutive bear bars, a lot of traders will wait for the market to start to get bull bars before looking to buy. And for the bears, sell the close, but we're in an area where buyers probably will come in. Obviously, we're collapsing here, so traders will wait to buy. Theoretically, you had sell the close bears 18, unable to get out after they were disappointed by 1920, and they'll sell more higher, like below 31, trying to get down to the 18 close. So there may be buyers at the 18 close. These bears will be happy to get out break even on their sell here and with a profit up there. So should be some buyers around the 18 close, and it looks like we're going to get there. I would not buy with a limit order when the market is falling sharply like this, but some bears who are short might buy back their shorts. Can you sell closes down here? I would not. Bottom of a trading range day. You can see the buying at the 18 close. Little bounce here. You got bears buying back their shorts. You have some bull scalpers with limit orders buying the 18 close, expecting that it would bounce enough for them to make a profit. They're expecting that enough bears will buy back shorts to get a bounce here. Ticks, another fairly low reading in ticks, minus 700. Remember, this one was probably not going to be the final low in price, but we rallied for a lot of bars. So I think the market is ignoring this tick level right now. The bears did not get what they wanted, and I would start the process over again. A new tick extreme, probably not the final low in price. In trading range days, I pay less attention to ticks because more often you get failed signals. New tick low, less chance we'll get a new low in price. For the bulls, a higher low, 6, 19, and now 36. But 5 consecutive bear bars. I would wait for a second buy signal. This is the end of the third hour, and now we have consecutive inside bars on the 60-minute chart. Inside bar, and last hour was an inside bar. Breakout mode for the bears, theoretically it's a sell, and for the bulls, theoretically it's a bull flag and a buy. Very tight bull channel. Even if the sell triggers, probably not going to fall very far without first going sideways for a lot of bars. And for the bulls, bear bars, not a good buy, probably sellers above. So probably sideways, probably this is what the next 10 bars will look like. Bears, I would get out above any bull bar. And for the bulls, I would wait for a micro double bottom, or for 2 or 3 big bull bars like 19, 20. Bulls trying to get a good bull bar, but 5 consecutive bear bars. Better to wait for a micro double bottom. Can you sell the 36 high? We're low in what has been our trading range day. Better to sell closer to the average price, and better to sell after a couple legs sideways to up because of a sell climax. $36, a pullback in bear trend. So it's a low one short below 36, a terrible location, bottom of a trading range day, trying to form a triangle, higher lows, lower highs. Best choice here is wait. I'd get out of shorts above 36. I would look to sell again if we get a low 2 near the moving average. And for the bulls, I would not buy with a stop above 36. I would wait for a micro double bottom or some second buy signal, or for a very strong reversal up. Sell the closed bears 18, disappointed 19, 20, sold more higher. Buy the closed bulls 30, never had a chance to get out. So we may get all the way back up to the 30 high at some point. With the sell-off as strong as it is, I do not think we're going to get up to the 30 high. I talked earlier that the really important prices are down here, and we still may get there before the end of the day. Sometimes it'll get there in the final half hour. Low 136, low 137, but in the buy zone around the 18 close and a higher low. There are buyers of both the 28 low, the 25 low, the 23 low because of the trading range day, and they probably will make money if they scale in lower. We should get back above that 28 low at some point. I don't know if we'll do it here or if we have to go down a little bit more and get there, but we should get there. Trading range days tend to be forgiving of traders who enter with limit orders, scale in, and use wide stops. They usually are able to avoid a loss or make a profit. It's still a low one for the bears, but micro double bottom, not close enough to the moving average, and it's still a trading range day. So I think it's probably better to wait for it to get closer to the moving average. Probably a tight trading range here with sellers above and buyers below. The euro today has had a lot of abrupt reversals as well. Strong sell-off, strong rally, strong down, strong up. Big outside down, but near the bottom of the trading range. So I think the probability is less for bears selling down here. Might be a limit order market in a tight range here. Bulls trying to get a second buy signal, but they need a good bull bar to erase 38. And bear is hoping to get a new low of the day, but it's still probably a trading range day. Is it a swing or a scalp? And it's a second reversal near the bottom of a trading range day. In trading range days, it's probably not going to be a swing. You might take it as a swing, but you'll probably be disappointed and you'll scalp out. This is typical behavior in a trading range day. You're getting a second buy signal near the bottom of the day, but you know the odds are it's not going to go all the far up. So you're scalping, and your risk is greater than you want given the size of the reward. And that's always the case in trading range days. There's always something wrong with everything. But if you're going to trade, you got to take the trades. It's easier. You can increase the probability by using wide stops and scaling in. You know, for example, I said there would be buyers below 22, and there were. Probably buyers below 25, buyers below 28. So we'll probably get above the 28 low. We may go a little bit lower first, but you know, the odds are trading range day, limit order traders using wide stops and scaling in get rewarded. Bulls trying to get another outside up bar. If they do, that would be a higher probability buy above 39. With this many bear bars, this is probably going to go more sideways than up. Bulls trying to get the bar to close on its high or near its high. The bulls who use wide stops have an advantage. You know, they have increased risk, but they also have higher probability of making money. When you get a big bull bar like that, especially in a tight trading range like this, a lot of traders, instead of buying the high of 39, place a limit order to buy a 50% pullback, betting that the tight trading range will result in a test back to the middle of the range. For the bears, it's a low 2 bear flag, 37, but it's on the buy above 39, and therefore I suspect there'll be more buyers than sellers below 40, and that there'll be buyers around the midpoint of this rally from that low to this high. So not a strong sell. Do I think we're going to rally much? Nope. Trading range day, so you have to assume that we're going to just get a lot of reversals and that the market's not going to go very far up or down. I did place a limit order exactly there at 27.05.5, and I got filled. It might be because I placed it quickly enough. Sometimes, I would say most of the time when I place limit orders and it hits my price but does not go below my price, I do not get filled. But sometimes I get lucky. I just scalped out with a couple points, although I think we'll probably go higher. The stop order bulls 39 should be able to make a point, so we should go at least 6 ticks above the 39 high, but we're right at the moving average, which is resistance. Remember, we should get up to the 28 low, the 25 low, 28 low, to let those limit order bulls get out. The bulls who bought at that low, the bulls who bought this low have already made money. Bears low 2, but consecutive bull bars and a decent buy signal bar, probably going at least a little higher. The bears have their low 2, but 3 good bull bars, 2 good buy signal bars, fairly low in a trading range day. So I'm not going to take the short. And for the bulls, a problem, right? It's a tight trading range right below the moving average, and a low 2 and a bear trend. You have the bulls have bought 39, deciding right now whether to get out break even or to hold. The probability is they'll make money, but their risk is greater than their reward. We're probably not going up all that far. Well, that's the sell signal. I'm not going to take it. Too many good bull bars plus trading range day. Would I buy the 41 low? Nope. It's a low 2 and a bear trend and a bear bar closing on its low right below the moving average. You know, that's all good for the bears, but with those 3 bull bars and the trading range day, I still think we're going to go up a little bit more. Bulls buying the 41 and close. They know if it falls below 41, the probability of them making a profit, 39, goes down. So they're trying to prevent it from falling below 41. The bears know that as well, and they're trying hard to get it to go below 41, but so far unable. So far the bulls are winning the fight. Bar 36 was the close of the third hour, and we went below it, 38, and immediately reversed up. Remember, we had an II on the 60-minute chart, a breakout mode. It's a sell below, buy above. Tight bull channel, probably not going to go down very far. You can see they bought the low of the last hour right here. It's still on the 60-minute sell. We went below the low of the third hour, the II, and the bears are trying to get a resumption down. You can do it for a swing short, but with all the reversals today, it's more likely a trading range day than the start of a bear trend day. Sometimes you'll get a low 2 at the bottom of a trading range day in the middle of the day, and then it just leads to a huge bear trend. But if it's going to be a big bear trend, we have plenty of time to get in. You don't have to take the first sell. Trading range day, like today, low 1, low 2 at the bottom of the trading range day. Probability is buyers below, but nothing is very high probability. Trading range day, the probabilities are around 50-50. The bears got their swing down. So that's the sell, below 41. And it's probably 50-50 chance that we go down, 50-50 chance that we go up. I guess it's a little bit higher that we go up with those 2 good bull bars, 36, 39. How high up can we go? We probably will not get above the 30 high, but we should get above the 28 low. So we should go about halfway up at a minimum. Will the bears who sold 41 get out above 41? I think that's reasonable to do given the good bull bars, and therefore there'll be some bulls buying above 41. But we may get a wedge, 3 pushes up, 1 pullback, 2 pullback, 3 wedge bear flag. Tight trading range, really not good trading. We're on a buy above 39, we're on a sell below 41, and probably 50-50 probability for both. Remember those targets I told you about? I said the market may try to get down there today. Bears trying to trigger the sell again by going below 43, and then they'll try to get a series of bear bars. Typical trading range. You know, you're left wondering, and by the time it's clear, it's often too late to enter. So there's a lot of room down here. So if we start to sell off, we could get a measured move down. We have a double top here. You can call that a double top. Here's the neckline. So take us down there if that's the measured move. The upside, I think, is probably more limited. I think we'll have a hard time getting above the 31 lower high. For the bulls, a second entry buy and 2 legs down. ABC. So it's an ABC pullback, a high. It's on a smaller time frame chart. This is a high 2 bull flag. Again, you buy above 40 and sell below 43. tight trading range breakout mode. It makes sense, but trading with stops in a tight trading range is, I think, a low probability strategy. Bulls trying to get a bull breakout above a bear flag. They want to measure move up. And the bears are hoping that this is a wedge bear flag. 1 pullback, 2 pullback, 3. Bulls trying to get a gap here. Why are we hesitating right there? 6 ticks above 39. A lot of the bulls are disappointed by the bear bars, and they're happy to get out with 1 point. And I had to get 6 ticks above 39 to get their 1 point. And for the bears, it's now a wedge bear flag. 1 pullback, 2 pullback, 3. Wedge, a lot of wedges often have the first pullback make a new low. When a market transitions, is often bullish and bearish price action. So it's very common if you're getting a wedge bear flag for the bear flag to begin before the bear trend ends. So the first leg up in the wedge is not from the bottom of the bull trend, or bottom of the bear trend. A lot of times you get one more new low. Bears want to get a bear bar 45 closing on its low with a pretty good bear body. That would be a higher probability short than below 41. Right now the sell is below 43. You could argue below 45, either one. Probably better below 43. And for the bulls, they did not get a gap up there. And the only reason to sell is looking for a test down to those magnets below. Will we get there? I still think we're probably going to be more sideways here. This does not look very bearish. Bears swing sell. You're selling at the bottom of a tight trading range, at the bottom of a bigger range, low probability bet. Higher probability, you wait for 1 or 2 bear bars. But we have these magnets here, and I said early on that if we rallied, we still would try to get down here. This might be too far to get there, but it's a swing sell here below 45, taking a chance that we get down there. Today's Friday, so I'm always thinking about weekly support and resistance. Here's the weekly chart. The targets are not all that obvious. We've got that December high and the close of last year. And the close of last year was just so important all year. We just oscillated around it all year last year. Here's the daily chart. And then we have the sell climax high here. I've been saying all the way up that we might get there. And if we do, we'll probably go a little bit above and stall or pull back. So that's a magnet as well. Theoretically, bulls will have stops below 39, although I think most of them will get out below 45. Swing stop for the bears above 44, maybe above 46 if it closes near its low. And let's see if we can get sell to close. If we go down, it probably will be sloppy with lots of reversal attempts. Bulls trying to prevent it from falling below 39. And it looks like a lot of the bears are scalping. That tail represents buying, and some of the buying is from bears scalping out. Not a very good buy signal bar, 46. The next bar or two will give us information. Do we break below 39? Do we close below 39? Remember the 60-minute chart, we have a bear II breakout mode, and we triggered the sell by going below the low of that bar. So let's see if the bears can get a swing down. This is not a time of the day when the market typically begins a trend. Very often, middle of the day, 9:30, 10 o'clock, 10:30, the market goes more sideways. I did sell below 45. I did not scalp, but I'll get out probably around break even if it gets back up there. I'm taking a chance that we go down. If it stalls, I'll probably take partial profits. I could take some off here, 2 points. I might. Will bulls buy above 47? You can see they bought the 39 low. It's a small expanding triangle. We have two lows, 39, 47, and we have highs. You can see traders are buying back shorts. I would not buy above 48 after the 3 bear bars. I'd wait for a second buy signal. Remember I said if we go down, it'll be a swing, and it probably will repeatedly try to reverse up. Will the bears exit above a bull bar? I think it's reasonable to do it in this case because it's also a buy signal for an expanding triangle and a higher low. With the 3 bear bars, I'm not willing to get long. I had to step up. I have a contractor here. I'm back to flat. And you can argue wedge bull flag, 1, 2, 3, expanding triangle. But with the 3 bear bars, I would not buy above 48. So right now I'm trapped out. Still have a lower high, 44. We're still below the moving average. With 3 bull bars, I think we're back to neutral. The reversal up, good for the bulls, but why is it not stronger? Theoretically, it's still on the sell below 45, but I don't like to see a bull bar closing near its high right after I sell, especially if there's a reason to buy, and there is. There's a small expanding triangle, there's a higher low, and there's a wedge bull flag. So for the bulls, they have a bull trend here, and this is a pullback, a wedge pullback. Can you sell below 51? I'm not going to after the 3 bull bars. So right now I have to wait. This is what I was talking about, that it would be hard to hold short, even if it's going down, because of the market constantly trying to reverse. I'm back to flat, and I did not sell below 51. I was not fast enough, and I did not buy below 47. Bulls, if they get a reversal, 52, I think bulls will buy, but they'll need a pretty good bull bar to reverse the big bear bar, 51. And the bears are still trying to get down here. Because of the tight trading range, there will be some bulls buying below bars 47 and 1 point lower. They've already made their 1 point scalp. Stop order bulls, surprise bar 51, they would need a strong buy signal bar 52. And had I shorted below 51, I probably would have scalped. We're getting too many reversals. Even though we're channeling down, you can view this as a spike and channel. So spike, and then second push, and third push. I'm flat. This is not behaving the way it should, where it typically behaves if it's going to come down here. So it makes me think we're not coming down here. But I think a difficult buy above 52 with that big bear bar. And one of my general rules is when in doubt, stay out. If I cannot structure a reasonable trade, then wait. I don't like to be selling too low, and I don't like to be buying too high in a trading range day, because you're going for a small reward, and selling low, buying high, low probability. And if the bars are big, the risk is big as well. Limit order traders make money. They sell above bars, 47. They sell more higher. They buy below bars, 47, and buy more lower, and they scalp. Stop order traders is more difficult. Any one of these reversals could lead to a trend. So any one of them is an okay swing, but the math is really difficult for stop order scalpers buying above 48. Those bulls lost money, and then selling below 50, below 3 bull bars, not all that good. Is it always in long or short? I think it's always in short since 45. I think the bears get out above 48. Theoretically, they sell again below 51, but I would get out above 52. Trading range day. So open of the day often is a magnet. You can see we've been oscillating around it all day, above, below, above, below, above, below, above, below, above, below. Still on that sell below 45 on flat. We still have the magnets down here. A lot of times when you get these low 2 bear flags at the bottom of a trading range, it's really hard to stay short because you keep getting reversal attempts. Bulls continue to buy with limit orders at prior lows. Bears need a close below, and then they'll try to get a measured move down to the targets. Possible give up bar and swing down. Bears have the close, but will the bulls get a reversal 56? I am flat. I think it's really hard to structure profitable trades when you're being forced to sell below bull bars or forced to sell below big bear bars 55. And buying, I don't want to be buying above a bear bar 47. After 3 bear bars, I don't want to buy above 48. And 52, not a very good buy. Important bar. If it closes on its high, you'll get some bulls buying. Usually, if there's a very big bear bar, like 35 or 55, I usually don't buy the reversal up unless it's a very, very big reversal bar. While I close the gap below 52, it's not a strong buy signal bar. You can argue trading range day and you can keep buying every new low, but with a big bear bar 55 and the tail 56, I'm going to wait. The bears were unable to get consecutive bear bars, and that will make a lot of bears hesitant to sell down here. We're still in the swing down below 45, but really difficult to hold short. Right at the 2,700 big round number, that's been another important magnet. This is the biggest bear bar in the bear trend. It therefore has an increased chance of being an exhaustive end of the trend. We do not have a very good buy signal bar, 56. For the bears, a low one short, 57, but a bear doji, so not high enough probability for a scalp sell, not high enough probability for a scalp buy. Best thing for the bulls would be a bull inside bar here, closing on its high. That would be a better buy for a test of the top of the sell climax 55, back to the open of the day. Second leg down, likely after 55, and 58 would qualify as the second leg down. When you get these exhaustive Sell climax type moves, 55 late in a bear trend. 60% of the time you get one more leg down, but 60% of the time you're going to get a reversal up, either after the first leg or second leg. So I would get out of shorts above 59 if it's a decent bull bar, and bulls will buy expecting this to be the end of the selling. Failed breakout, low of the day. Collapse, right? 60% chance, a little bit more down, but 60% chance either that will reverse or this will reverse. Even though it's a tight bear channel, it's a credible buy if 59 closes on or near its high. If it has a 3-tick tail, a lot of traders will wait to see if 60 is a bull bar. The bulls need a bull bar closing on or near its high to attract buyers. Because of the possibility of an exhaustive sell climax, I think the bears get out above any bull bar, even a 1-tick bull doji. This is the swing buy looking for a reversal back up to the open. Tight bear channel, so we may not go straight up. For the bears, they want a double top 56, but we have a big sell climax and a second sell climax. 60% chance we're going to get a couple legs up. Minute first target is breakout point, 52 low, the 57 high, the moving average, and then ultimately the top of the sell climax, which is also at the open of the day. For the bears, they need a pretty good sell signal bar of 61 or 62. But with the consecutive sell climaxes and a decent buy signal bar, I would not take the short. You can see it stalling 5 ticks up. That tells you that a lot of the bulls are trying to scalp part or all for only 1 point. 10 ticks up, bulls can take partial profits, 2 points. There probably will be some, I typically take at least partial profits. Sometimes they take the entire position off. I did not take the entire position off here. I think we have a decent chance of getting back to the open. Whenever you get a reversal up in a bear trend, and you look to the left and you have a possible double top, you have a double top bear flag. Usually the reversal up here, 60, 61, is reasonably strong. Yet there's still a 40% chance that you're going to fall for a measured move down. So 40% chance we're going to do that and get down to the close of 2017. It's a problem for the bulls. What do? Do they get out below 62? Well, if it's a bear bar, especially if it closes anywhere near its low, I would get out. And for the bears, do they sell? I think it's an okay swing sell. You have a 40% chance of getting down here, which is about twice your risk. But you can see in a trading range day how it's worth taking at least partial profits. I typically take half off because the probability for the reversals is not, or the breakouts is not as high as it would be on other days. Important bar, right? If it gets a bear close, especially near its low, a lot of the bulls will give up. If it closes near its high, a lot of the bears will give up. Okay, so a small bear body. Most bears are not going to take the short double top bear flag. Some bulls will get out, some will hold long. The probability is better than 50-50 that we're going to try to get up to the open. Double top bear flag, pretty good reversal. Very often the reversal is strong enough to make it always in long. But if you look to the left and you see a possible double top, and then you get a bear bar, 40% chance you break below the neckline and fall for about a measured move down. Pretty good reversal up. yet. Look to the left, maybe a double top. So 40% chance it will swing down. Same thing here, but the bears ran out of time. Sometimes the double top bear flags are small. Other times they're very big. Here's a bigger one. Very big one. Did not reach the measured move, but did get a new low. Still on the buy. Bears would like to get another wedge bear flag like here. Swing bulls and scalpers, they can get out right here, but swing bulls stop below 60. While you could get out below 62, I think if you're not scalping out, I would keep the stop below 60. Bulls giving up, and bears, they do not have a good sell signal bar. So difficult to short, but they might sell below 64 if it closes near its low. Still on the swing sell, but a problem bar for the bulls. They're trying to prevent it from trading below the 64 low. I think a lot of the bulls will give up below 64. I think a difficult short below 64. Bulls had an expanding triangle 48. They might try to get that again 65. I am back to flat. And I'm not selling down here. I'd like to buy again, but I need another bar like 60. You can see we're trying to get down to the targets that I talked about on the open. Bulls trying again. If it's a decent buy signal mark, it's another reasonable buy. When you have these channels like this, I think it's difficult to trade because they're constantly reversing up, and the reversals are all reasonable. So you get long, and I typically scalp part, usually half, and then try to get out the rest. Try to get out for a swing, and if it fails, try to get out around break even. The shorts, I think a lot of times they're difficult, except for limit order shorts. It's hard to sell below 63, so the sells below 64. And the same with this, selling below 54, not good. You're selling below 55 for a scalp, and the risk is much bigger than the reward. So it's limit order trading. Even then, the limit orders are difficult. If you sell above 43, do you get out above 41? No, I'd probably get out above a bull bar 44. It did not get above 44. Bull's trying to get another credible buy here. They're still trying to get back to the open of the day. The bulls would like the bar to close on its high. Bears will get out above any bull bar. It's interesting that for the bulls, there really were not any good stop order buys except 60. They have another one, 66. 38 not ideal, and 48 bad, 52 bad, 56 bad, near the Globex low. Looks like a perfect double bottom, but I think we're just a little bit above it. It is a perfect double bottom. Bears, I'd get out above 66. They could hold short stop above 64 and take a chance that we get down to the targets below, but I would not. Actually, it did not reach the Globex low. It got to within a tick of the Globex low. Sometimes these bear channels last all day. They just keep going down and down and down. keeps trying to reverse all day, yet it keeps making new lows. And today is looking like this, a series of bear bars and then a lot of reversals, and the market just keeps going down. Limit order bulls keep buying below everything, below 60, below 61, below 60, below 60, below 65, below 66, and they're scalping. Bulls trying to get a bull IOI for a second buy, and the bears are trying to get down to the magnets below. The target now is the top of the most recent sell climax, which is the 64 high. If 68 does not close near its high, probably better to wait IOI, but pretty far below the moving average. So I'm not going to take that sell. But it's still pretty much a trading range day. We're now about a measured move down from the high to the open. Pretty close to it. A lot of times the market will go about a measured move and then try to get back to the open, which I still think we're going to do. And the bulls are trying to get a buy signal bar 69. Limit order bulls make money all day in these channels. They buy every low and they scalp. And the bears, it's harder because a lot of times you're forced to sell far below the average price, but the general approach is to sell below a bear bar that is reversing down from the moving average. You can see selling below this bar would have been profitable, but you're selling really far down, so your risk is big and the profit was small. That's the buy setup. Second entry buy, looking for a test of that high, maybe the open of the day. Bears will try to get another double top. We have a double top here. This could go up quickly if the bears give up. The bears have been making money all day selling reversal attempts, but at some point they give up, or at some point they often give up. This time I took some off at one point just in case. I'm going to try to hold for a test of this or that. Stalling 9 ticks tells you a lot of the bulls are trying to scalp at 2 points. It has to go 10 ticks for them to make 8 ticks. Also, moving average. Look what happened at the moving average for the past couple of hours. Bears, every time it gets near the moving average, they sell. And it's been profitable. So you'll have some bears selling here. The question is, will there be more bulls buying? Don't know yet. 2 points, took a little bit more off, and I'll try to swing the rest. You can see 10 ticks, boom, sells off. A lot of the bulls took profits at 2 points because that's the best that they've been able to get for several hours. They had a chance here, and that was it. Bears trying to get another double top bear flag, 67. Bulls probably will get out below any bear bar. And for the bears, they've been selling below bear bars at the moving average all day. But here we got a second entry buy, 69, and 2 decent bull bars. The bears still have a target below. I don't know. If it closes on its low, maybe it's a short. But unless it's pretty much perfect, I would not take the short. This is that similar day where we got a bunch of bear bars. The bulls got a second entry buy late in the day, and all I could do is get another test of the moving average. The close of the bar is important. If it's a bull bar, it's slightly more likely to go up. If it's a bull bar closing on its high above the moving average, we probably will go up. It becomes very likely that we go up. If it's a bear body, a lot of the bulls will get out. And you can see it's the absolute minimum, the absence of a bear body. So for the bears, double top 67. Other computers will say double top 64. But the doji body, I think most bears are not going to sell below 71. Bulls, they might hold long because it's not a very good sell. They've been buying new lows all day. If they get a strong enough reversal, they'll start to buy bear flags. So 71 is a low one, bear flag. So some bulls might buy the 71 low, but it's getting pretty late in the day for limit order trades. So not a very good buy, and a lot of the bulls are disappointed and they're getting out around break even. Can the bulls prevent the sell from triggering? Can the bulls get a big bull bar closing on its high? The bulls need to do more. They're really not doing what they need to do. So a lot of the bulls are getting out and break even. It's another sell below 72 if it closes near its low. Every time we get a bear bar below the moving average, bears have been selling. Bulls need the bears to give up. They need a big bull bar, and they need a close above the moving average. If they get it, then we'll get back to the open. That's the close of the 6th hour. Bulls finally have a bull body. Does not look like it, 60-minute chart, but there's a small bull body there. 6-bar bear microchannel, probably not going to go up very far. First target, moving average. Second target, sell climax high, 64 high. It's a ledge, 4 consecutive bars at the same price. So typically we get back above it at some point today. For the bears trying to get a low too short at the moving average, but now they have 4 bull bars. So most bears would need a good sell signal bar, 73, to take the short. Bulls hoping for a gap and a measured move up. Takes us back to around the open. Today's a sell signal bar for Monday. With those 2 big bull bars Wednesday, Thursday, I still think we're probably going to get at least one more small leg up, and therefore probably buyers below today's low. The bears are trying to weaken today as a sell signal bar. They're trying to prevent the day from closing on its low. They're trying to get it, they'd like it to close with a bull body, so they'd like the close of the day to be above the open of the day. Broke above the top of the ledge. Typically, if you break above a ledge, you pull back below the ledge high. We might run out of time today, but when you have a ledge, I was thinking of it as a magnet, and I look for it to break out and pull back. A ledge for me is 4 bars with the same high or same low in a tight trading range. So there can be some spaces between the bars. So here we have 5 bars with the same low, and there's a little space between it here. And then here we have 4-bar ledge. So I'm looking for a breakout above and a pullback below. Here, a break below and a pullback above. Ledge top, we sold off very far from it, and we broke above it and pulled back, broke above it, pulled back. Ledge top, 4 bars at the same high in a tight trading range. We broke above it and we came back and pulled back below it. Here we're breaking above the top of the ledge. It's possible that we run out of time before we get a pullback, in which case we'll probably get the pullback on Monday. Always in long. You could argue buy the close, but we're at one target right now, the sell climax high, which is where we are on the daily chart. We had the crash on the daily chart right here, and we're at the sell climax high. And there are always bulls buying back, selling out of their longs there. They bought here, exit there, and you have some bears selling there. And that's true on the 5-minute chart as well. What happens back at the open? Well, any of 3 things. It can stay there and the day becomes a doji day on the daily chart. It can continue up to the high and the day becomes a bull trend day. it can reverse down and the day can close on the low and be a bear trend reversal day. Most of the time, it ends up closing around the open. You can see on the daily chart, it's a doji bar, close around the open. It trended up, trended down, and then back to the middle. It's still by the close, but we're very close to the target, the open of the day. Bulls will get out below bear bar, and I typically also get out 4 or 5 or 6 ticks below any bar, including a bull bar. Will the bears sell double top? With the 6 bull bars, I would not take the short, and too late in the day to be buying with limit orders. So it might be hard to get any more trades today in a day for me to take the sell after 6 bull bars, 7 bull bars. Trading range day, a rally to the open, a lot of time left. The bears were able to get a bear trend. Rally to the open, final 4 bars sold off. I don't think I'm going to be taking any more trades today. While the reward potential is big, selling below 78, the probability is small. And for the bulls, the reward potential realistically is not very big. We'll probably end up finishing the day right around the open and having a doji day for Monday. Tempting short, but 6 bull bars or 7 bull bars, I'm letting it go. For the bears, gap bars. We have bars with a gap between the low of the bar and the moving average. However, it's a pretty strong minor reversal, and we're near the open of the day magnet. Not enough time left for a swing, so the reward potential is small. And after 7 bull bars, the probability is not high enough for a scalp, so better to wait. Pretty quiet trading range day. Looks like we're going to close around the open and form a doji day for Monday. So this would be a doji sell signal bar for Monday, not a strong sell. On the daily chart, very tight bull channel, 3 or more pushes up, 1, 2, 3, parabolic wedge here. You could say 1, 2, 3, parabolic wedge. Odds are we're going to get 10 bars, in other words, 2 weeks, 10 bars of a pullback starting soon, maybe next week, with these 2 big bull bars here. Typically, I expect at least a little bit more up. So if we sell pullback on Monday or Tuesday, we might get one more little push up, and then I think we'll pull back here, a tight trading range in a bull trend. That's why I bought puts the other day. I think we'll pull back here. On the spider, we're around 270, and that would be about 265, so about a 5-point move. And if you buy puts, and the spider moves 5 points, theoretically, you'd make 2.5 points, but you'd probably make closer to 2 points because the volatility is decreasing and the time decay is greater. Daily chart, last year's, the close of 2017, close of 2 years ago, was the most important price on the chart all last year, and we're oscillating around it right now. And then we had a crash, stock market crash on the daily chart. And the top of the crash, spike, pullback, parabolic channel. That's a target, and we're at both targets. And I think this is the sell zone. You know, obviously we can continue up forever, but more likely we're going to get some profit taking here. Traders look to the left and say, oh, it's a pretty big bear trend, and we're about halfway back up. Reasonable location to take some profits. So I expect we'll get some profit taking and a pullback starting probably next week. Next Thursday and Friday, I'm in Orlando. I'm speaking at the Money Show in Orlando on Friday morning at 11:15. I think it's 11:15. I'd have to check. You can check my websites or their website to find out. I think they're webcasting it. They asked me if I would minded having them webcast it, and I said that's fine. Going back to the charts, weekly chart. This is Friday, so last day of the week, and it's a good-looking bull bar. 5 of the past 6 weeks, good-looking bull bars. Last week was an inside bar, a pause in a bull trend, so it's a high one buy, but it's only a doji, and that typically does not lead to a strong rally. So I expect a rally for a week or two. So you know, this is 1 week. Maybe next week we'll go up a little bit. I suspect that next week will either be a reversal bar up and down or a little bear bar. This is not a good buy signal bar. And that also corresponds to the daily chart. I think we'll probably go up a little bit more, but not much more, and then we'll start to pull back. $5 on the spider is about 50 points on the E-mini. Yesterday we had a possible wedge, higher high, major trend reversal at the end of the day, and we did not get a good sell signal bar on the open today. 3, not very good. 4, bear bar closing on a low, but right above the moving average, and around a 50% pullback. The bulls had a high 2 with 5, but a doji. And then they had an outside doji on 6, so a micro double bottom. And some bulls bought above 6. You can see 7, big bull bar. 7, big bull bar closing near its high, probably going higher. 8, follow through, always in the long. However, yesterday we tried to top. Yesterday we spent most of the day sideways, probably a magnet. Daily chart, we're in the sell zone. And even though 8 and 9 are very strong, I think we're going to get a reversal, a wedge top or a parabolic wedge. The bears got a reversal on 12, close on the low, possible high of the day, reasonable short. Traders who want high probability wait for a second signal, like below 15 or 16. 19, possible test of the 6 high and a higher low. So we may bounce here, but with the selling as strong as it was, 16, 17, 18, if we rally, it'll probably be a bull leg in a trading range. The bull's trying to get a wedge with 27, but a bull bar, and then we had a breakout that failed, 31. During the rally, I said it's a tight bull channel, but it's probably a bull leg in a trading range, which means there will be a bear leg in a trading range. Some bears sold below 31. Others waited for 3 bear bars, and then they sold below 32, and you can see 34 was a bear bar closing on its low. We collapsed down 35. Bulls tried to reverse up 36, but after 5 big bear bars, the bulls would need a second entry buy, and there's a risk that this is a spike and that we'll get a channel down, which it turned out to be. The bulls had a second entry buy, 39, a reasonable buy, but after 3 attempts up, 1, 2, 3, and not able to get above the moving average, bears started to sell. They could sell below 41, but with 3 decent bull bars here, I'd wait for a second sell, which was below 45 or below 43. Bulls tried to reverse again, 48, but with 3 bear bars, I'd wait for a second buy signal, and instead we failed at the moving average reverse down. Possible bear channel, so possible spike pullback channel. To me, it looks like we have a lot of bull bars. Just like on the way up, I thought we would get a reversal down. On the way down, I think we'll get a reversal up. However, channels can last a long time before you get your reversal. 52, a reversal attempt, a wedge. but a doji bar after a big bear bar, I would not buy with the stop above. But limit order bulls bought all day long. They bought below every prior low: 23, 36, 38, 47, 52, 56, 60, 66, 67, and they made money every time. And that increased the chances of a reversal. If the bulls keep making money with limit orders all day long, and every time they make money, that means the bulls are reasonably strong, and it increases the chances that you'll get a reversal up. We sold off for about a measured move down from the high to the open. It looks like a bear leg in a trading range, so I thought we'd get back to the open. The bulls trying to get up there 60. We had a sell climax 55, so a 60% chance we were going to get a reversal up on 56 or 60. On the close of 55, 60% chance we would get one more leg down, which we did. The bulls tried to get the reversal up 60, but became a double top 57, micro double top 61, 63. The bears sold below 64, maybe 65. Bulls bought below 60. The bulls had a buy, an expanding triangle, 56, 60, 66, but two decent bear bars. A lot of the bulls would wait for a second buy signal bar, which they got 69. And we got an outside up bar 72, closing on its high, and we worked up to the high of the day. For stop entries today, there were a lot of reversals, but not a lot of easy stop entry trades. You could sell below 4, but we're probably not going down far. It's probably going to be a 50% pullback. And then you could buy above 6, an outside doji, a high 2 with 2, but not good. And then higher probability above 7, above 8, and that's it. What about buying above 11? I said that at the time, my concern was parabolic wedge, might possibly the top of the channel. So I did not want to take the buy. Aggressive bears sold below 12, other bears sold below 13, below 15, 16, 17. 18, I would not take that sell. It's 3 bear bars, extreme, plus there might be buyers around the 6 high. The limit order bears have sold the 6 high and sold more higher. And bulls, they could buy above 19, higher probability above 20, 21, and then above 27. And you could buy above 27, 28, 29, but we're getting near the high of the day. And this is probably a bull leg in a trading range, and I think we're not going to get above 12. So buying high up is dangerous. Some bears sold below 31. Others waited for 3 bear bars, 33, and then started selling 33, 30, below 33, below 34, 35, a collapse, a surprise bar down. We'll probably get at least a small second leg down. You could sell the close, but we're right in the middle of the day. Still have a higher low. I'd rather wait for a second sell, which was either below 41 or 45. I said I did not want to sell below 41 because of the 3 bull bars, and then I did sell below 45. For the bulls, a reasonable second buy signal above 39, but disappointment 41, and then a micro double top 44. Most bears would give up below 45. The bears had a chance of a swing down to the targets below, but when you get these channels and double top bear flags, wedge bear flags at the bottom of the trading range today, if you're short, it's really hard to hold short because typically every time there's a new low, the bulls buy it, and we keep trying to reverse. And any one of those reversals could do that. So it's hard to hold short because you may end up watching the market go far above your entry price. Not good stop entry buys above 48 or 52 or 56. I thought it was good above 60. Maybe 66 if you use a wide stop, and definitely above 69 and 72. For stop entry bears, 45 was good. 51, I was concerned with the 3 bull bars, and I thought there'd be buyers below 47. We had a surprise bar down 55, probably a little bit more down, so you could sell below 55 or 57. 59, would I sell below? Nope, we're at the absolute low of the day. We were likely to get a second leg down after 55. This could be the second leg down, so I don't want to be selling at the low. And next, 64, 65, really not that good. I would not sell below 65, new low today, because bulls will be buying 60. And that would be it for the stop entry shorts. Buy the close, sell the close, buy the close, 7, 8, 9, 10, theoretically 11. I would not buy 9 or 10 because of the big tails, and I would not buy 11 because of a possible wedge or parabolic wedge. Sell the close, 16, maybe 17, yes, 18, yes, but we're in the buy zone around that 6 high where the limit order bears started to sell. Not good buy the close up here. You could buy above bull bars, 20, 21, 26, but we're getting pretty high up in the day. Sell the close. A lot of times traders start selling on the third bear bar, 33, so it's 33, 34, 35, a bigger bar, and the fifth or sixth bar into a sell the close. If it's at support and a bigger bar, I usually do not sell the close. And then none of this is really good buy or sell the close. Here, maybe buy 72, 73, but that's about it. Limit orders, really not a lot of good limit order, bad bull flag, bad bear flag trades. Would you sell, would you buy the 12 low? No, possible high today. Would you sell the 14 high? Probably. It's a weak buy signal bar, and we have a buy climax. And would you buy the 22 low? Probably not. Would you buy the 24 low? A 50% bounce and a low 2? Not great. Buying the 27 low? Probably okay, but you had to be really quick to do it. Would you sell the 36 high? After the 5 bear bars, it's probably a profitable trade, but it's a bull bar. Buying the 37 low? It's a low 1 after a strong sell-off, but we're down to support. So it might be buyers below. Sell 43 high. Well, it's still on the buy above 39, so not great. And then buy the 50 low. I would not. And you can see it was a loser. If you're buying at the new low, not up there. Bears would sell after the 3 bear bars. They'll sell 47 high. Not a strong buy, 52. They might sell above 52, 56. That tail on top made it a weak buy. Some bears would take that sell. And I think that's it. Probably buyers below 75. So bear channel, bull flag. We're trying to break out of it. Weak sell signal bar on the daily chart, probably buyers below today's low on Monday, but we're probably not going much higher before we pull back 50 points or so over the next couple of weeks. I always lose my voice by the end of the day. Okay, question. Ordinarily on a trading range day, I would not want to sell below bars, below the moving average, but today appears to have converted into a bear channel. You sell below any of the bear bars after bar 41. After bar 41, I did. I sold below 45, and did I sell below? I may have sold below 51, but I don't remember. And 55, I debated it, and I think I did not sell below. And that was it. But that's really common in trading range days, bearish channel days, especially when the channel looks like this, fairly tight, and the bulls keep making money. It's really a problem for bears if they see the bulls making money at every new low. Even with that big collapse on 55, the bulls made money buying 52. So something's wrong with the bear trend, and that makes it likely that we'll get some kind of reversal back up. Okay, question. You said if you operated a trading room, you would have one computer taking very low probability trades, selling bar 3, stop above bar 81. Why is this? Because I would do it more. Well, first of all, if I have a trading room and I had 10 different algorithms running, I'd want as much diversity as I could have. I don't want a lot of correlated algorithms, because then I'll be basically taking different variations of the same trade. And the math works out. And to me, any algorithm that is consistently profitable over time is worth considering, and one that is not correlated with any other thing that I'm doing, I think is definitely worth doing. So I would do it. I wouldn't trade much money doing it. So if I had 10 computers running, 10 algorithms running, maybe I'd trade 10% of the money with a low probability, high reward algorithm. And always in long, do you scale in higher? For example, if you buy one contract, you buy more if it keeps going up. Then once you close them in a big bear barge, you again scale back in and go all the way back in. Typically, more often than not, on the buy the close rallies, I buy and scalp, I buy and scalp, I buy and scalp. If I'm buying early on, a lot of times I'll try to swing. And if I am swinging, a lot of times, most of the time I usually do not add. I instead take off pieces as it goes up. But your basic point is a good one. If you buy and the market goes up and there's another signal, you buy more. It all depends. As long as your total risk is within your limits, you can do that. It certainly makes sense. It's certainly, I think, a better strategy to be scaling in as the market goes your way than scaling in as the market goes against you. If you're scaling in as the market goes against you, which I do, it's really easy to lose money. So you can only do it if you can handle the stress. And that means you have to have it planned out in advance. You have to know how much you can risk, and you have to know where you're going to get out. You have to know where you're going to add on. In the course, I talk about that. I talk about scaling in as the trade goes against you and scaling in as the trade goes in your direction. A lot of stock traders, although they don't specifically say it very often, a lot of stock traders, let's say Apple's going up, they'll buy Apple, and it goes up, they'll buy more. It goes up, they'll buy more. And that's scaling into a trade that's going your way. Warren Buffett did that with Apple. Over the past couple of years, he bought Apple, and as Apple went higher, he kept buying more. What's his name? It was an old guy on Fast Money. I can't remember his name. Anyway, he's about $20 billion. He tends to scale in. He's a value trader, and he tends to scale in as the market goes against him. So he buys, and then it goes down. He buys more, thinking it's more value. I can't remember the guy's name. Carl Icahn. He's a value trader. And a lot of the value traders who look to buy things because they're cheap, buy more if the market goes against them because it's then cheaper. Okay, next question. In a trading range today, setups that look bad are not that bad and give a swing profit. Following this reasoning was the probability 50% for the swing shorts at the 15 low and the 31 low. It's really hard to sell below 15 and hold short all day. It's really hard to sell below 31 and hold short all day. If I had sold below 15 looking for a swing after that kind of a rally, I'd get out above 21 because there would be a risk we could get a double bottom and a bull trend. Had I sold below 31, I would have gotten out above 36 or 38, possible higher low, possible double bottom, bull flag, and rally. So typically, I would get out. And same with the shorts, like selling below 45. I sold hoping for a swing, scalped out part, and then get out, I think, above 48. So a reasonable short. And if you held short, you could have made a lot of money if you traded it perfectly, but you would not have. Because if you sold below 45, you probably would have to get above 60, and it would be hard to get short again below 64, knowing the market's trying to bottom. And would you get out below 66 or 68? Would you get out above 66 or 69? You'd have to. So you keep getting these buys, and I think for me, I would keep getting out because it's too much risk of a big rally, and you don't want to be holding short, having it come all the way back to your entry price, which it did, 78 high, 45 low. So every time, if I'm short for a swing and I get a reasonable buy, I typically get out of the short. Okay, question, would you share information on any automated trading? Are there any platforms or software that you suggest? I spent probably, I don't know how many hours, maybe 10,000 hours over the years, not in the past 10 years, but over the years, testing and developing automated systems. And I traded them for a while. My problem is I'm too controlling. And I kept overriding my system. So if the system triggers a buy and I'm in a long, and I look at it and I say, well, this is an exception that I don't have programmed into the algorithm, and let me rewrite the algorithm and add this exception and then see what kind of results it gets. So I was just spending all my time rewriting and making algorithms more complex and basically curve fitting. And I don't like that. Also, I don't like a lot of the most profitable algorithms get all of their profit from 10% of the trades, and so 1 out of 10 trades make up all the profit. And if you look at let's say you look at an algorithm that trades over the past 10 years, and it had 50 signals, and 2 of the wins were huge. And if you did not take those 2 trades, the algorithm would have been a losing strategy, right? And that is really common with algorithms, that all the profits come from 1 or 2 trades. And if you miss those 1 or 2 trades, if you don't manage them perfectly, then your algorithm is a loser. So, and I don't like that. And plus, I can see so much stuff going on during the day. I got algorithms in my head, and I just trade what I see. So also, if I'm sitting here in front of the computer all day, which I really like to do, I like doing this is how I like to spend my life. I don't want to have some computer trading my money. I want to trade my money myself because I think I can do a better job. So as far as recommending software to test ideas, I'm sure there are many companies out there. TradeStation is an obvious one. However, you have to decide whether algorithmic trading suits your personality. And for me, it did not. But for some people, it does. I think most people, most successful traders have a combination of techniques that they use. Some use some algorithms, but manually override them. Some use fundamental information. Some use multiple time frames. And I don't care what a trader uses to make money. If he's consistently profitable, she should be admired. It's a wonderful thing. So if you can do it with algorithms, that's fine. If you think about it, also, it's really hard to find a goose that's laying golden eggs. And most of the hedge funds out there that are trading algorithms don't have like 5 algorithms that they use all the time. They have algorithms, and they have algorithms that test the market, that determine what kinds of algorithms it should be trading. So if the market is becoming increasingly tight trading range, the algorithms will switch from, or the master algorithms that are determining what they should be doing will allocate more money into trading range algorithms and less money or no money at all into trending algorithms. And then if you get a strong breakout, the algorithms that are very good for trading ranges, you shut them down and you switch to the algorithms that are good with trends. So everybody wants things to be easy. Everyone wants a goose laying golden eggs so they can just sit back and have the money come in. But there's no easy way to make money. And even if you're an algorithmic trader, if you're going to try to maximize your profits, you probably need many algorithms, and you probably have to become very proficient at switching algorithms. But if you're that good at reading the charts, determining which algorithms to use, And if you're going to be in front of the computers all day, why not just look at the charts and trade appropriately? If you see a lot of trading range trading, look for reversals. If you see a lot of trend trading, look for breakouts and buy the close and sell the close. Okay, hope everybody has a good weekend.